Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 33rd report of this year, and as usual we're going to start off with the changes in commercials positions, so here we go. As you may see, we've got crude oil on top of the list with a 19% change in commercials positions. We've got 23% change in large speculators and a huge 47% change in small speculators positions. Of course, these changes are much larger than average. We don't see these changes too often, and it is of course a bearish COT change signal. Now, opening a 5-year chart, we can have a glimpse on the COT Extreme situation that is present in the market. And as you may see on this 5-year chart, that it is not really an extreme in either way. So you can see that a bullish COT Extreme would mean commercials being at roughly 100,000 contracts net short, and they're now at about close to 300,000 contracts net short level. And of course, a bearish extreme would mean that they're down below 500,000 contracts net short level. So that's not the case right now, which means that this rally that has started actually early this year after this bullish COT Extreme was present in the market, this bit of a decline that happened can be only a possibly just a reaction in this this rally that has started, and we may easily see prices continue their rise. I'm not saying they will. Of course, it's tricky to tell. I'm just saying that the COT Extreme right now does not necessarily give you an obvious help. So let's move on and have a look at the soybean oil market, where we have the exact same change in commercial positions as we had in crude oil. Of course, in this market, such a change does not necessarily mean a big signal. You can see that we have similar changes and even larger ones more often than crude oil. But nevertheless, it is a bearish change signal that tells us this rally may end. We may see a bit of a decline in the next couple of days. Opening a 5-year chart, you can see that we're moving away from a relative bullish COT Extreme. Relative because you can see that we are pretty far away from significant extremes historically speaking, large, close to all-time COT Extreme levels. So it's just a relative one, but as you can see, even these relative extremes have the possibility to affect the market. So in this case, we can say that we had this relative bullish extreme, and now that prices are going higher, we shouldn't be that surprised. And of course, a bearish point may come when commercials go down to, well, roughly 150 or even larger net short positions. And of course, in case of large speculators, that would mean just the opposite. Would mean about 150,000 contracts net long or even greater positions. I'm not saying that that's the only case when we can see a decline in prices, because of course there are relative bearish extremes as well, but that would be an obvious situation. Natural gas is our next market with an 18% change in commercials position. Here we're talking about a bullish COT Extreme, bullish COT change signal. And of course, the picture is a bit different than what we had in crude oil, even though these markets, of course, correlate with each other because they're both energies. Opening a 5-year chart, you can see that we are moving away from bullish COT Extreme levels gradually, not that sharply, not that fast. But as we do so, of course, you can see that there's a nice rally in the market right now. There's of course a decline that we have experienced in the last couple of weeks, month, but generally speaking, the trend is still from, well, I would say from early this year is still up. Of course, the broader picture, of course, well, yeah, you can argue it is a decline in some ways. But of course, the stress that has built up in the market has eventually pushed prices higher, and of course, we shouldn't be surprised about that. Moving on to large speculators, COT Extreme, we've got two markets with all-time COT Extremes on top of a list. The S&P 400, that's what we're just looking at right now. Opening a 5-year chart gives you a more clear picture. So here's the all-time COT Extreme that you can see in large speculators. This, of course, is a unquestionable bearish COT Extreme picture that we have in the S&P 400 market. Now, of course, before anyone jumps into this situation and starts shorting the market, I strongly advise you to have a look at all other indexes as well, because these of course can give you a more detailed picture about the indexes in general before you act on it. The next market is the British pound, where we not only have an extreme in large speculators, but also an all-time COT extreme in commercials. And of course, we're not surprised to see that. We have had the Brexit that affected the market, and of course, traders are reacting. So this is a strong bullish COT extreme. And of course, you may see how well the market acted to these bullish extremes in the past. The only suggestion I have is to be patient. These extremes can be present in the market for quite some time before we see a reaction from the market, and this time may be not only a few weeks but even month, possibly, because the stress level has to build up. Of course, it's difficult to tell when the volcano erupts. I hope you can imagine, but it's there. And of course, if you see a possibility, or your strategy gives you the option to go long, I'm just saying, the COT report is supporting that. Russell 2000 is our next market, with a 59 report extreme in large speculators, 58 in commercials. And as you may see, I was just telling you in the S&P 400 how important it is to always compare markets and their categories to each other, because it can give you a more detailed picture. Here we do not have that significant bearish COT extreme that we had in S&P 400. I mean, if you look at the market on this 5-year chart, you can see that there's still some space left to reach those levels. It is a bearish extreme, no question about that, a strong one. And as you can see, the last time we had a similar extreme, when commercials gone down to net short territories, and large speculators became net long, that actually coincided with a nice top in the market. So it is definitely supporting a bearish move in indexes. So it's the second now in the row. But I would advise you to have a look at the NASDAQ, the Dow, and of course the S&P 500 as well before you decide. Okay, that was all for this review. I hope you enjoyed it, and I hope to see you in our next COT review. Take care. Have a good week. Bye-bye.